Welcome back, everyone, to Money and Markets. Over the course of the past year, we have observed an increasingly close relationship between commodities and emerging markets. As the economies of the developed world slowed, emerging markets picked up the slack, boosting demand for natural resources and drove up prices. Back on set with us to discuss this trend and offer their outlook for the year ahead are Brodrick and Rudy Martin. And rejoining us from Bangkok, Thailand is Tony Sagami. Sean, I want to start with you. Do you see demand from these emerging markets continuing to put this upward pressure on commodities prices?
Yes, I do. We haven't seen a slackening of demand from China. In fact, if anything, it's going up. China's purchased imports of crude oil, rose 18% in 2010 and increased in the final quarter. And if you look at it, their demand cycle for iron is actually in a low stage. It's probably going to go higher from here.
Okay, Tony, what kind of demand trends are you seeing out of Asia?
Well, there's a lot more commodities than just oil, metals, and minerals that are being affected by the booming Asian demand. I'm talking about soft commodities. Let me give you some numbers. In 2010, soybeans jumped by 34%, wheat by 47%, corn by 50%. Rubber by 50%, and cotton and sugar are now at all-time highs, and that's all because of a booming Asian demand, particularly from China. And that also reinforces my #1 rule for making money this decade: you need to get long whatever the Chinese are buying.
Rudy, a lot of the Latin American countries that you study, they're commodity exporters as well as importers. What's ahead there?
Right, I totally agree with Tony's assessment of what's going on the global market, especially as it relates to things like sugar and corn. These are big export crops for Latin America. Obviously has a real big impact on the economies of Brazil and Argentina. And in addition to that, the soft commodities there, I fundamentally believe there's also natural resources like iron ore that will also be important factors.
One gauge, as you all know, on how well commodities are doing has been shipping. Sean, what's your take?
Actually, shipping is in bad shape, but it's not from a lack of cargo, it's from a surplus of ships. 200 Cape-size ship vessels, that is, those that are 1,000 feet long that can carry iron ore or coal, 200 of those are going to join the global fleet this year, raising the size of the global fleet by 18%. So that's really putting downward pressure on the shipping rates, but they're still shipping more of these, commodities than ever.
Tony, you watch shipping very closely. What is your take?
Sean is absolutely right. The Baltic Dry Shipping Index is now sitting at a 1-month low. And like he said, that's more from oversupply. But it's also a big factor is the new Australian floods that are affecting it. But instead, take a look at what's happening with iron ore. Iron ore is now at an 8-month high, and that's from demand from China. And lastly, China Ocean Shipping, it's also known as COSCO, that's China's largest shipping company, and it recently said that it expected 2011 to be its best year ever.
Okay, well, let's turn now to industrial metals. That's a big beneficiary of the infrastructure boom that we've seen in a lot of these emerging markets. Rudy, which commodities and which companies are you bullish on going forward here for 2011?
Well, clearly, I just mentioned iron ore, and you just heard the reinforcement on the story there that China needs iron ore for its steel. The one company that I really am very excited about is a company called Vale, ticker symbol VALE. It's one of 20 positions in my new Emerging Market Winners newsletter, and that just came out this week. So I'm very excited, and I think it's a very timely call.
Sean?
Well, I certainly think many of the energy commodities will do well, especially crude oil, and certainly food. Grains, they're just doing great. Beyond that, you can look at things like cotton and sugar, and also the industrial metals, like copper, palladium, that kind of thing. Gold and silver, not so much. I expect some weakness from them in the early part of the year, but I think they'll have a great year overall. In fact, this could be a buying opportunity.
Okay, Tony, your turn here. Any companies or commodities that you're particularly bullish on?
Sure, this is a little different take on what Rudy talked about. I would take a look at a company called General Steel. That doesn't sound like a Chinese company, but it is. What they do is they're the largest manufacturer of rebar in China. And rebar goes into every high-rise, dam, bridge, you name it. Rebar is one of those basic building blocks and is one of the most important infrastructure components.
All right, let's talk about precious metals now. Sean, give me a brief recap here of what you see ahead for gold and silver, obviously after some blockbuster stellar returns that we've been seeing. But how should investors be playing these markets going forward here for 2011? Are we going to see more of the same?
Well, silver and gold had great 2010, as you said, but they're actually underperforming the rest of the market right now. And I expect that underperformance to continue at least for a while, you know. Gold and silver should continue to consolidate. That's a normal and necessary part of any bull market, you know. You have corrections. So I would wait for gold to pull down to support. It has support around 1350, also maybe 1292. I don't know if it'll get that far, because every time it sells off, the investors in Asia come in and buy it. But wait for the pullback to work itself out, and then you can go long gold and silver. Silver Wheaton, which is an actual producer of silver, it picks up silver streams from other companies at a very low rate. So it's very leveraged to silver, which is in turn leveraged to gold. That's one way that I would play it.
All right, Rudy, what's your take on precious metals?
I definitely agree with Sean in terms of his call on gold being a little bit overvalued at this point. It's obviously an opportunity to buy in on some names, but I don't have any to recommend today.
Okay, Tony, final question to you. What's your take? Precious metals moving ahead 2011.
Well, I agree with both Rudy and Sean. As far as timing, the short-term swings, I defer to Sean. He's the expert. But I think long-term, there's no question that gold and silver have an important part in the Asian story. The Chinese government has $2.4 trillion in reserves, and they're deploying a lot of that into gold. And it's going to turn into a long-term bull market for gold.
Okay, Tony Sagami, Rudy Martin, and Sean Brodrick, thank you all for your time.
Thank you.
Thank you, Jamie.
That's it for this edition of Money and Markets. Next week, we'll take a closer look at one particular segment of the commodities markets, energy. What's the outlook for oil, natural gas, coal, and other fuels in 2011 and beyond? As always, if you have a question or a comment for any of our guests or a suggestion for a topic that you'd like us to cover, just email us at weissmoneynetwork@weissinc.com. I'm Jamie Holmes. We'll see you next week.